fall, y'all, as we like to say in the South. This is our Q4 market update. This is my trusty intern, Jolene here, who's going to participate a little bit. She wanted to hear this, so thank you for being here today. Now, I just left a private luncheon with Bob Dahl, who is the chief investment strategist for Nuveen Investments and also was managing one of the world's largest funds for BlackRock. So he's kind of a big deal, but my point of telling you that is not that. It's to tell you that we had a great opportunity to talk about a lot of the current market and political landscape. And we both agreed that the likelihood, Jolene, you're going to want to hear this. Jolene, this is important. The likelihood of a big market move down that is sustainable is pretty low. And so that's good. That's a good thing. You can go back to sleep now. And primarily because earnings are higher than expected in most areas, and for good reason. And also, it's important to remember that a 10 to 15% drop in the market, that's more of a correction, and that's normal. And the 3 to 5% moves, those are just daily and weekly moves. And I'm telling you this because it's important to remember, because I think these days are coming again, hopefully not soon, but they will come, when the Dow Jones is going to have its down 300-point days. And you're going to start asking, Jolene, I know you're going to start asking when it comes to your trust fund and your college fund, you're going to ask, what do I do? What am I going to tell you? Nothing. Not because I don't care, but because long-term planning really takes the need to react to that kind of noise out of the equation. Also remember, and Bob and I talked about this, all of the cash on the sidelines. This is a good thing, especially like times like now when cash is paying nearly nothing. It's more of a reason that I don't see a sustained downturn in the market. Maybe a correction, but not a sustained downturn. Now, unless something major happens, God forbid, like North Korea drops a nuclear bomb, or a myriad of other things that aren't even worth talking about or worrying about right now, in my opinion. Bob and I both agreed that the theme of stocks over bonds resonates well now. So I think focusing on stocks more in the portfolio versus bonds. And I don't think that the business cycle is over yet. To make a baseball analogy, since we're in the middle of ending baseball season, we're in the 7th inning of a 9-inning ball game right now. Unemployment is really low. Wage growth is still has room to grow before we really get to a point where the markets are ready for that recession tipping point. So something to keep in mind. Bob also talked about how the Fed is likely to increase rates maybe 2 to 3 more times. I've heard that from several different institutions. And then politics. I get this question weekly. Definitely stay asleep for this one. Nobody wants to talk about politics right now. But how the heck is Washington up, or is the market up 10, 15, 20% with all the mess in Washington? And that's because they don't really have a lot to do with each other, which is hard to really get our minds around. But Bob made a really good comment. I thought it was funny. He said that earnings trump politics. Pun intended there, but it's important. Earnings trump politics. And what does he mean by that? That things like earnings are what matter, as I mentioned before, and earnings are good right now. Bob also, with a lot of his deep connections to Washington, he talked about, as Trump's term continues, the likelihood that there's going to be less regulation for business. This has been and will continue to be a good thing, at least for the market. I'm keeping social issues and the rest of it out of the equation. I'm just talking about the market. Likely no infrastructure or healthcare bills or major changes like he talked about. Very unlikely to get done this year. 2018, Bob and some others felt that maybe there would be a modest tax cut, like a 25% corporate rate, not the 15% Trump talked about or campaigned on, but continued chaos and turmoil. And remember again that earnings trump politics, and that's very important to not forget. And let me end by saying a favorite quote of mine from a well-known investor, Sir John Templeton, that is very relevant right now. That bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and they die on euphoria. And currently, I think that we're at the end of that skepticism phase. We're beginning into the optimism phase as it comes to the market, but we're not at euphoria yet. So this bull market it's old, but it's not dead. Now, I'll really end, Jolene. This is what matters. This is what matters. Spend time with your family, your loved ones, your kids, your friends, your puppy dogs, and remember that there are so many more important things to worry about than money. So that's it. Jolene, anything else to say?